Hi, this is Zak Mir from Master Investor with a look at some bulletin board hero stocks on Friday, the 8th of May. Starting off with Chariot Oil Gas, where you can see there's been this breakout after an extended base, which has been on the daily chart since December. We've managed to clear the 200-day moving average of 10.9 pence. Support yesterday coming in towards that 200-day line, which is normally a key event for a stock or market. That shows acceptance of the new trend, the new more bullish trend. I would take a more sort of optimistic line on the shares now, looking for a target towards 18 pence, which would be the top of this October rising trend channel, and really the stop loss on the buy argument probably an end of day close back below the 200-day line if you're close to the money. Otherwise, maybe we're using the green 10-day moving average at 9.57 as a stop loss. That ties in, the latter level ties in with what was formerly resistance around the 9.5 pence level, while the shares were basing earlier this year. MX Oil, a very popular stock amongst private investors, had a decent run already, looking for some consolidation here towards the 20-day moving average, 4.11 pence, but as long as we hold back above this late April low, which was around the 3.63 pence level, we should see further progress. Just how high the shares could eventually climb, probably indicated by this resistance line here towards 5.5 pence, 6 pence over the next 2 to 4 weeks. But consolidation initially there for MX Oil. New World Oil and Gas, obviously the star of the moment. Incredible move here. The proviso before was really that we wanted to see the shares break through the 50-day moving average of 0.11 pence. Obviously, they've done that very, very easily indeed. Situation now is that probably we're going to head towards the, on technical basis anyway, to head towards the 200-day moving average at 0.29 pence. Trajectory of the shares probably along the lines of something like this towards 0.3 plus. In terms of the price channel that they've been in, the floor of the channel running level with the 50-day moving average, so that sort of looks as though we could squeeze a bit higher back to where we were already in December. That would be the goal for the bulls at the moment. The initial high of 0.14 pence in April might make for a decent stop loss for those who are cautious of the breakout that we're seeing at the moment. Next up is Physiomics. So shares looking encouraging here in the sense that support yesterday came in towards the 50-day moving average, which was previously resistance. Obviously, we've seen the 50-day line block progress several times. This also looks like a bull flag that we have here for the end of April, beginning of May, and the view now really a return towards 0.14, 0.15. Could be on the cards over the next few weeks if the current momentum that we've got, and it seems to be quite strong, strongly backed volume momentum, is maintained as we are seeing it at the moment. Telus Financial shares another stock which is favoured amongst private investors. Situation at the moment, we're sort of trying to forage for support between the 3 and 4 pence level. Just below 3 pence is the initial support there for the stocks this year. Probably the best way forward here is to use an end of day close back above the 10-day average at 4.1 pence as the first momentum trigger, and probably by that time the RSI now at 39 will also push back above the neutral 50 level. So waiting on Teathers at the moment. Possible support line here in the way that I've drawn it from February towards 3.5 pence, but probably better to wait for a close above the 10-day line before thinking of the stock as a possible new buy on the dip. Last rather in terms of the list today, we've got Wildhorse Energy, break above the 200-day moving average, very encouraging support, and the low of yesterday towards that feature, so does allow some scope for further upside here, even though the shares are overbought with the RSI at 79. Looking for a target towards this December resistance line projection at 10 pence over the next 2 to 4 weeks. Probably this stage, the warning in terms of the buy argument would be back below the 6 pence level, which was resistance late April. That's it from me. More updates at the Traders, Zak'sTradersCafe.com.